Hey guys, it's the Simple Investor here. Today we're going to be taking a look at Robinhood, who reported very impressive earnings today. Before we get started, be sure to like and subscribe as it really helps out the channel. Let's get to it. So as you can see here, Robinhood reported earnings today. Their stock actually took quite a bit of a jump after they reported very impressive earnings. They actually beat analyst expectations of 15 cents. They had really strong revenue growth. Here we can see their change. Their growth here was up year over year of 69%. And again, that net income was coming in quite nicely as well for them, coming in at 188 million. That's a 652% change year over year. And again, the stock is reflecting quite nicely of that. What for Robinhood, what is really driving this is a mix of a couple things. They have some really strong incentives to gain new clients here. They've launched this program called Robinhood Gold, which is a subscription service. They've launched a new credit card as well. It's an attempt to win over new clients. They also offer a 1% matching bonus. Robinhood, if you're not familiar with the company, really took off in 2021 when the meme stock frenzy was going on with GameStop and AMD. And since then, they've continued to have sustained growth. They've also had some controversy back in 2021 when they froze trading on GameStop, which caused a lot of controversy. But nevertheless, it has not slowed them down. If you look at this chart here, they've really seen growth here with their Robinhood Gold program, and as well their transaction-based revenues. So transaction-based revenues being revenue that's derived from each time a person makes a trade on their platform. That was up 69%. Of course, the whole GameStop thing kind of amped up again back in April and May of this year, which also helped raise those levels. Obviously, more people are trading, more transactions are occurring on the platform. So that really drove revenues. But back here, what I was really looking for was just to see how much income they were collecting and how much of a change it was. And again, it was quite impressive, up 652%. And this revenue here was quite impressive as well. And then if you look at their total net revenue, again, up 682 million. So a really impressive quarter for them. And then again, they beat analyst expectations by 15 cents, which on an earnings per share level is quite impressive. But with that, looking at their revenue every quarter since going public, they've grown quite nicely here as well. You can see in 2021 when that GameStop frenzy was going on, they had strong quarterly growth here. Was at the highest, and it kind of died down a little bit, and then it started to ramp up into 2023 and into 2024. It's really started to take off for them. And on another note, another fintech company reported earnings last week. It was SoFi. Super strong earnings for SoFi as well. Their net revenue increased 22% as well. And what's really impressive with these fintech companies is they're starting to offer more promotions to win over new clients and such, which is really helping their business. And they're seeing double-digit growth. SoFi saw double-digit growth, and now Robinhood's seeing double-digit growth. So there's this kind of push for more fintech. And then these earnings really impressed Wall Street. I mean, honestly, if you look through these earnings here, there isn't a single bad thing. Like their highlights here are super impressive. I mean, their net deposits, this is another big thing to look at, where they've had a growth rate of 41%, which was super impressive. And their gold of subscribers, like we were talking about here, increased by 61% year over year. So again, it's just a super impressive earnings. This company's really young. They're really innovative, and they're really taking on the banks. And you can see here they're doing some share repurchases quite aggressively for this company at $1 billion. So again, that earnings per share was super impressive, beating analyst expectations by 15 cents. But again, that's always going to be masked when you see robust stock buyback programs. It's always going to mask kind of the adjusted earnings per share. But if you compare this company, I mean, to what the S&P 500 has done the last 5 years, it's not really a comparison, just because this company's in its infancy stages. S&P 500 would have beat it the last 5 years. But Robinhood's a growth stock. Its best days are ahead of them. They've got double-digit growth all around, double-digit growth year over year in revenue, in new clients. They have incentives. So this company's best days are ahead of them. This is an intriguing stock to add to your portfolio as a speculative play. It's not one that I would suggest investing in it as a core position. It's one that you hold as a speculative play. And there's nothing wrong with it. It's really starting to grow quite nicely, and their growth drivers are really starting to actualize for them. But let me know what you think. Do you think Robinhood's a stock that you'd like to buy, a stock that you'd hold, or a stock that you'd sell? Let me know in that comment section below. Be sure to like and subscribe if you haven't already, and we'll see you next time.